Back with closing trades right here in 89. The closing trades are looking strong irrespective of underperformance from the key heavyweights like Reliance Industries, which is still down by about 2% as we speak. Titan, Asian Paints, you've got Unilever, Ultratech Cement, Nestle, Wipro, TCS. In fact, amidst IT as well, not all and every stock is actually holding out. But that said, metals and banks giving the market the desired leg up. You've got Tata Steel, Hindalco, JSW Steel, NMDC. They're all springing up in action along with SBI, which is putting on weight by about 3%. 432 is where the stock price is. Axis Bank, ICICI Bank are all going very, very strong as we speak right now. Let's talk about the markets further then. We've got Rupen Rajguru, Head of Equity Investment and Strategy at Julius Baer, joining in on the show right now. Rupen, hi, great to have you on the show. Thanks for joining in. Just wanted to understand what you're making of the market construct, because the economic data points with regards to inflation and what the central bank action both back home as well as by the Fed is going to be, that aside, the equity markets are in no mood to stop.
Hi, good afternoon, Aisha, and trust you and everybody at ET Now family is safe and healthy. The big word right now, buzzword, is inflation, right? And from what we believe that the big picture that one has to look into is the economic recovery. So while inflation, we have seen, very confused reaction of the market after the Fed's meet last week, and I just remember famously Alan Greenspan had once said that I must warn you that if I turned out to be very clear, then probably you have misunderstood me. And I think that clearly resonates the way the market is kind of reacting, because trying to make out of whether the Fed is going to be hawkish or kind of continue to stay dovish. So having said that, as I said, we are in for an economic recovery. The markets, yes, has moved significantly ahead than what everybody would have anticipated. The big question now, Aisha, one has to ask is that, are we in a bubble zone? I think that's the murmur that what you keep on hearing. My take is that if I were to look into what constitutes a bubble, there are like 2-3 factors, right? First and foremost is the price going up. Yes, that we are seeing. Is it across the board? The answer is no. Certain segment, yes, but across the board, no. Secondly, how are the investors behaving? So be it investors in India or across the globe. Probably yes, there is too much of interest in the stock market. So various indicators, be it the greed fear indicator or the bull bear indicator, all are indicating kind of we getting towards the bubble zone. But the third and the very important leg out here is the corporate behavior. So corporate behavior is nowhere close to what usually they behave when there is a bubble emerging. So are we seeing big M&As? No. Are corporates doing mindless capex? No. They are initiating capex, but they are very, very cautious about it. So all in all, just to sum up, markets probably will see more of rotation and less of direction. So by that, what I mean, probably we might not see a big up move in the index level, but the rotation which is happening will continue. So that's the way we look at the markets.
Quite an interesting point that you're making, and part of that rotation, I guess, is playing out in banks finally snapping out of their underperformance. What is it that you're making of the investment mood across banks right now? Because each of them is forming a very distinct flavor. You've got the PSBs led by SBI on one hand, HDFC Bank, which has been a rank underperformer, and then of course you've got the corporate focused banks, the likes of IndusInd, Axis, ICICI Bank, which have been the darling of the street of late.
So Aisha, here that rotation theme is clearly is visible within the financial services, if I were to put it at an aggregate level. So you're absolutely right that some of the erstwhile leaders of the banking have been a relative underperformer this last, say, 6-8 months rally. And because the fact of the matter is that we have seen, we have come out of a very serious corporate credit cycle, right? And over a period of time, a lot of the banks have taken, course correction in the way they kind of, look into their overall book, the distribution between corporate, retail, and I think increasingly all the banks are looking into retailization of their overall portfolio, and also the corporate book has also been, now relatively clean. So that catching up, wherein some of the banks who have very strong franchise on the liability side as well as are very strong on the digital side, but earlier because of sort of some of the corporate related issues were not have got significantly derated. Probably they are kind of mean reverting. So that includes the say largest public sector bank as well, because we have seen it in the past in an economic cycle. The valuation of those tend to be on the upper band of the range at which they were. So beginning of the cycle, probably they are at the lower band. Now they are somewhere in middle, but probably they can still go higher because they are now still trading at a reasonable valuation. So that rotation is very much happening there as well.
Good afternoon. We've seen commodity prices across the board soaring, and there seems to be a bit of a debate as to whether or not we're seeing this, the extended phase of abnormally high prices lasting for a long time, or can we describe this as a super cycle? What's the sense that you're getting basis what we've witnessed in the past few months?
Here, I would say, is there across the board super cycle? No, we don't think it that way. Having said that, there are a distinct theme of decarbonization, if I may use that, and some of the commodities which are in the forefront of that theme are definitely seeing huge amount of demand. See, there was a big demand destruction last year, right? So some of these demand is coming back. And also there was big supply disruption. So because of, in lot of the base commodities, this demand supply mismatch is currently playing out, which we believe will kind of even out over next few quarters or so. But certain metals which are kind of linked to that decarbonization or green theme, I think the demand there is genuinely has gone up and probably will go up significantly in future, so that the prices of those might remain highly bid as compared to some of the other base metal also, which we believe that in the demand supply cycle that supply will catch up sooner than later. But the big joker in the pack here is the way China behaves. So it is very difficult to predict both the demand as well as the supply side of China. But assuming that it behaves in the same manner, I think some of those demand supply mismatch will kind of even out over a period of time in those commodities. So we don't see a across the board super cycle, but some commodities will definitely see higher prices for a longer period of time.
Okay. And how are you reading into the overall digitization theme as well, looking at a lot of new age IT companies that could potentially get listed, that are set to drive the next phase of growth? Are you seeing a lot of merit for investors as well to look at this space closely?
See, across the globe, that has been the theme, right? The big value creation over the last 10-12 years have been internet company, platform companies, SaaS companies. So these companies have created huge amount of wealth across the board. In India, so far, probably private market was the only market in which people could have participated, and we are seeing some of these. Beginning of the year, a gaming company got listed, and very soon, say a couple of other big companies are going to get listed. So it's an interesting space, and I would say that in an overall allocation of an investor, these disruptive companies definitely merits a place. Having said that, we have to be cognizant at what value or valuation you are buying, while you will never get these companies at if you were to go by the traditional matrix of valuation. But I would say looking into individual companies per se, these companies definitely merits position in clients' portfolios. And I would say that globally, it has 10 to 15% weightage, in the index. So here also, eventually, these companies, disruptive companies, will be very much part of the overall portfolios.
Rupen, stay with us. Let's get in some ET insight as well as we're wrapping up that final quarter of the earnings. Let's find out how we've shaped up. We're here to understand the highlights as well in terms of the EPS estimates going forward and the kind of growth that we've witnessed in Q4 FY21. We've got Jayesh Khilnani with the details. Jayesh?
With ONGC declaring its numbers, we have now received the fourth quarter numbers for all the Nifty 50 companies, and the earnings picture has turned out to be the best in history. At the start and at the end of the quarter, analysts were anticipating 160 rupees EPS for the fourth quarter earnings. That was revised slightly upwards towards the earnings season to 163.4 rupees. But what we have actually delivered is far exceeding expectations. 183.9 rupees is the quarterly EPS that we have generated for the Nifty during the fourth quarter FY21. This is the highest quarterly EPS that we have received in history, and this is also the third straight quarter where the expectations have been beaten by the actual numbers. Let me address the scorecard for the fourth quarter then. You have 20 companies that have reported above expectations, which carry a weightage of 30%, while 14 companies are in line with a weightage of 23%, and then you have mixed and below, which is 10 and 6 companies respectively, with a weightage of 34 and 13%. So what does that mean for the valuation picture of the Nifty? For FY21, we ended at 550 rupees EPS. That translates into a multiple of 29 times. For FY22, analysts are anticipating 743 rupees, which means 21 times forward earnings. And for FY23, analysts have expectations of nearly 850 rupees, which will make it 19 times FY23 earnings.
Okay, Jayesh, we leave it at that. In fact, let's move forward and let's get also a sense on what's happening within the IT pack, given that it managed to close in at a record in trade yesterday after that big bang move that we saw. Today, of course, it's a much more a diverse move. Not all IT names are holding out. But let me take it across to Poonam and find out what Accenture had to say on the sidelines of its earnings, and more importantly, what it means for Indian IT.
Well, Accenture reported a fairly strong performance in Q3, the Q3 results beating expectations, and they've gone ahead and revised the FY21 guidance upwards. For FY21, they see a revenue growth of 10 to 11% versus the earlier guidance of 6.5 to 8.5%, and they have already reported very strong new bookings. In fact, Julie Sweet, who is the CEO of Accenture, she stated that these strong financial results reflect our continued momentum driven by the demand for digital transformation, and all this is surely having a fairly positive read for the Indian IT industry, and it does suggest a strong operating and a strong demand environment. CLSA states that Accenture is insistent on sustainability of demand and increased deal activity, and this should have a rub-off effect on the demand momentum for Indian IT. They prefer Infosys, HCL Tech and TCS, and do know that TCS has already stated that we are at the beginning of a technology upcycle, and both TCS as well as Infosys have guided for a double-digit growth. In fact, we've already seen that the Nifty IT index has outperformed Nifty on a YTD basis. Nifty IT is up 20% YTD versus Nifty, which is up 13%, and Mindtree, Coforge, Wipro, Emphasis have gained anywhere between 30 to 50% in 2021. In fact, watch out for Infosys as well. The buyback begins today. They already have announced a buyback worth 9,200 crore at a maximum buyback price of 1750 per share via the open market route.
Rupen, what are you making of the listed IT universe, and how much more legs would it have? Because since the start of the pandemic to now, IT has been a well-discovered story, but you aren't seeing any signs of abating. And why not? Because, you know, all the chatter coming in from IT majors like a TCS, Infosys on the sidelines recently of their investor calls, or for that matter, the kind of commentary that you've seen for Accenture coming in yesterday only makes your conviction higher for IT. Having said that, have the stocks not already run up a fair bit, or do you think this continues to be a long-term story which one must not get out of?
Yeah, hello.
Yeah, Rupen, go ahead.
Sorry. IT, see, now we believe that the second wave is clearly there, and the commentaries, as I think rightly you pointed out, be it Accenture or TCS in their annual general meeting, their chairman also indicated about the huge pickup demand they are seeing, especially on the services side. Say a couple of years back, they were growing at say 5-6%. Now, increasingly, we are seeing them growing at 12 to 13%, and that's the kind of sense which we are getting. And the other thing, an important thing, is the buyback, which you also just mentioned. That structurally we have seen since the the Indian IT companies have started doing buybacks, they have got re-rated, and Accenture globally has been doing it for quite some time now. With growth coming back, and growth which is much better than what it was earlier, and it looks like this entire digital transformation story is here to stay. We believe that there are definitely legs for the IT companies to go higher from here as well. Apart from the big behemoths, there are interesting developments happening in the smaller companies which are into, say, engineering, R&D, or some of the companies which are on the embedded product development side, because there again the runway of growth is very high, and and also some of these companies have grown at a very significant revenue growth. So all in all, we believe that IT is something which has to be part of the portfolio, and the biggies might kind of take a breather from a stock price perspective. But I think once the growth, we start seeing the quarterly numbers, we will again see the stock price also reacting to that. So buybacks plus growth revival are something which will keep the IT companies in interesting as far as the portfolio construct is concerned.
All cargo having a good run, nearly 10.5%. Godfrey Phillips as well, very active. There's Apollo Hospitals as well on the back of the brokerage note, which is upbeat in trade. Central Bank, IOB, Aegis Logistics, as well as SAIL and Sri Renuka. Those are some of the other movers on the Nifty 500. Kunal, let's get in some checks. Flagged off a number of stocks. What's the view on a Godfrey Phillips? And have you had a look at Nalco as well?
Yes, in fact, Godfrey Phillips has been one of the few stocks which has been more sideways. Surprisingly, the stock had not found any kind of a major trend in the last so many months. In fact, the last 7-8 months, if you look at it, the stock has been absolutely range bound. Today is finally one of the days where you're seeing the price volume breakout for Godfrey Phillips. So a strong move, 8%, 9% up so far. But I think intraday the stock went up to even 13-14% as well, and the volumes have been pretty much high. So, but what this stock requires is a lot of consistency. So these flashy moves, they tend to occur quite a few times for these kind of stocks, but they don't tend to get converted into strong trending up moves. So we need to see how that gets converted for a stock like Godfrey Phillips. Nalco on the other hand, so Avan, as I was indicating since last few days, that the markets are going through a daily sector churn. So a couple of days back we had auto, then cement stocks did pretty well. Yesterday you had the IT stocks which looks quite charged up. today, the metal stocks led from the front in the first half, and then it was overcome by the performance from the banking names. I think from the commodity space in the metal stocks, I think Nalco is making a comeback. I'd also done a chartbuster segment on metal stocks, indicating that how these metal stocks have come back to their mean reversion points. Some of them completing their 10 to 15% retracement as such as well. So I think on that front as well, I expect a stronger rally happening into many of these commodity-linked stocks, SAIL, Tata Steel, NMDC, Nalco, etc. I think these are the few stocks which traders could look at from current levels, and I would expect at least another 3 to 5% kind of a shorter-term trade into many of these names.
All right, stay on with us, gentlemen. It's time for a short break. Be right back with more on the other side. Action within the broader universe is we're quoting at about 15,859 on the index. The Sensex is up about 240 points, and as we speak, names like Reliance, Titan, Asian Paints as well as HUL and UPL are a bit tempered in the session, while Tata Steel, ICICI Bank, Axis Bank, JSW Steel and Tata Motors are leading the way, not to mention an Airtel. We're in conversation with Rupen Rajguru as well as our chartist. Rupen, wanted to get in a take as to what your outlook is when it comes to the entire telecom basket. Do you believe that with all of these announcements that have been doled out by Reliance Jio, that things could hot up within the telecom space as a whole, and what's the outlook on Airtel?
As far as telecom is concerned, it's now clearly getting into a 2.5 player industry. The disruptor there is now also focusing on the profitable growth. So with now 2.5 players practically being there, overall we believe it will be market or the incumbents will be well behaved as far as the competitive intensity is concerned. Having said that, if you see the over last 1 year or so, the largest player is focusing on on their overall infrastructure, getting their infrastructure right and spending a lot on infrastructure. So net as an industry, it has gone through extreme competitive intensity over last few years, over last 1-2 years. I think sanity is coming back, and we believe as a sector with now practically, as I said, 2.5 players, the pie is as I said, the competitive intensity is lowered, and it's something which one can definitely look into. There were some issues around regulations and some of the fees and all which one had to pay, but now I think now all is behind us. So all in all, it's a play which one can look into for next few years.
Okay, fair enough. That's the outlook coming in on the entire telecom basket. Meantime, Nuresh, let's get in your take on the charts then. What's the verdict on an SBI, and how are you looking at Tata Steel as well, which is active in trade this afternoon?
So SBI has given a short-term breakout today. So if we look at the charts of SBI, what we are seeing is 425 odd levels was a resistance for quite some time, and that has been taken off. So it's like a small trendline breakout today. For the last 6 sessions, 425 was the high, and that has been taken off, and the next high is closer to that 435 mark. So if we cross 435, we are getting into stronger momentum. And mind you, this is one of the few stocks which is higher than the peaks made in February by the banks. So for example, the peak made in February was closer to 428 levels. The index is still down. The bank nifty is down from 37,500 plus to 35,500 today. But SBI is clearly the leader, and the next one is ICICI. So continue to like SBI. We could be getting into a stronger momentum going forward over the next few weeks. Tata Steel is something again which is close to a short-term breakout. So if we take the recent highs, which was the recent peak of 1250, and the next peak was closer to 1190, we are very close to testing that 1190 breakout. So if we cross 1190, we get into a strong momentum. Same is the case with a lot of metal stocks. They've done their correction. Now we wait for the next momentum move to start. As of now, we are seeing false starts every day. The metal index goes up, finds some resistance at near-term highs of the last few days. Moment we see 1190 crossing on Tata Steel, 135 on SAIL, 75 on Nalco, 410, 420 on Jindal Steel, we will be looking at a stronger momentum. So the way we were looking out for banks which have broken out today, the next sector which we are watching out for closely is metals.
Okay, quite interesting. Let me also take it across to Priyanka Iyer, my colleague, and hear out what N. Chandra had to say on the sidelines of the Tata Consumer AGM which was held today.
Well, today at the Tata Consumer AGM, N. Chandrasekharan's focus was largely on the fact that the company is open to more acquisitions. They are looking to strengthen their distribution network further, and they have strong e-commerce plans as well. So to get into the details of that, Mr. N. Chandrasekharan said that the product portfolio will continue to evolve as the company is looking at more acquisitions, and they will continue to look at more acquisitions on the lines of Soulful as well. He said that they are focusing on growing distribution and expanding in beverages and food segments. They are strengthening distribution across the board. They will be adding more outlets, and more importantly, when talking about Starbucks, Chandrasekharan said that they will continue to invest and expand in Starbucks in the coming year. It remains a great opportunity, and Starbucks cannot be judged on the past year because of the challenges that the pandemic had brought. He also said that they will be increasing advertising on immunity boosting foods because they want to increase visibility on that front. He said that the company's capex plans stands at around roughly 350 to 400 crore per year, which will of course go towards these acquisition plans, strengthening the distribution network, growing the reach and expansion, and e-commerce plans as well. He also said that the company has gained market share in key segments like tea, salt, foods and beverages, and the company will also be launching a direct-to-consumer model for the 8 o'clock coffee next week. So that is one announcement that has come in. And secondly, he also said that Tata Chai is not going to be scaled up. It was an experiment. So that is one of the other comments that have come in. Another thing that the company is undertaking is end-to-end digitization of channel partners. So clear focus on growing distribution, growing reach and market share, and also in terms of the product portfolio via acquisitions.
Okay, Priyanka, we'll leave it at that. Interesting space right now, Rupen, when it comes to FMCG, because as much as they're grappling with the agri-commodity cost inflation, or for that matter the rest of the commodity inflation as well, which is definitely putting pressure on their margins, they've very easily managed to pass through the consumer the commodity inflation onto the consumers in a very calibrated manner. They've undertaken price hikes without damaging their volumes. Having said that, the point that you were earlier making about this rotation which is playing out in the markets, Tata Consumer side, because this has really been a high flyer year to date, or for that matter even all of 2020, it's given phenomenal returns. How are you now sussing out the entire staples universe, and where within that there are still investment opportunities, if at all?
See, staples as a category are, as they are classified as defensive category, but I would say here I would like to demarcate those companies which are kind of either to some extent disruptive companies wherein they are reinventing their business models, or the other I would say companies which are more of adaptive companies. By adaptive companies I mean companies who are getting future ready, companies who are getting into newer categories in which probably they believe they have right to win. So those companies who are because all those factors which you mentioned about inflation, commodity inflation, all can be managed well if you have a strong brand and how well you adapt to the new scenario. So some of the companies which you just mentioned, right, there again they are getting into newer categories, probably wherein they believe they have right to win and there is huge size of opportunity. So while valuation always will be a kind of rich in these companies, but some of these, as I said, companies, because of compliance reasons, we might not be able to talk about companies in particular. But the companies who are, I would say, disruptive companies or companies who are adaptive companies, getting into newer categories, constantly innovating, be it on the distribution side, on the e-commerce side, and all, how they kind of can scale up well. Those companies, we believe, are companies which can also create serious wealth from current point as well.
All right, thanks very much for joining in and sharing with us your outlook. It's been great chatting with you, Rupen. Let's take a very short break right here on Closing Trades with news that we're at 15,850 on the index, broader market showing more promise. Be right back with more stock trends as well as outlook on the markets.